But joining in now is Arvind Sanga, Managing Partner, Geosphere Capital Management, and David Chao, Global Market Strategist, Asia Pacific, Invesco, joining in. Gentlemen, thank you very much for joining in. Wanted to get your thoughts in. You know, this standoff between the Fed, Trump has been building. We've been questioning whether the Fed will remain independent. But it's sort of hit a feverish pitch right now with this unprecedented video by, Mr. Powell, countering all the statements. How big a risk is this for the markets? Arvind, you want to go first?
Sure. I think the market has been extremely sanguine about everything that President Trump has been doing. But it's clear that, on the one hand, you have a government which, Bernie Sanders or Elizabeth Warren would be comfortable with in terms of threatening people like the defense industry last week. Now, over the weekend, going after the banks in terms of the interest rates that they charge on the credit card fees, and now going after the Federal Reserve. I think there's a risk here that, at some point it might be the straw that breaks the camel's back in terms of market sanguineness about whatever President Trump does having no consequences. And if Fed independence is at risk, that is clearly, market may celebrate lower interest rates on one side, but on the other side, I think it would give real concerns about, inflation and financial depression and other concerns which could cause economic uncertainty. So I think it's really negative, and I think it's very interesting that Jerome Powell, Chairman Powell, has taken a direct stance against President Trump. So it'll be interesting to watch what happens in the days ahead. But there's also stuff going on the political front in terms of Greenland, and then on the background, there's also stuff going on in Iran. So the world is looking a much more uncertain place, and yet the markets are behaving like everything is hunky-dory, which we are a little nervous about.
All-time high everywhere, right? 26 just like 25. Arvind, hi, morning. David, hi, morning. By the way, there is, as we speak to both of you, there is news coming in. This is Donald Trump. President Donald Trump has given an interview to NBC, and we'll try and get the sound bites out. He says that Iran called yesterday to negotiate, on nuclear. Essentially on, the attempts has been to prevent Iran, to ask Iran to abandon its nuclear program and nuclear uranium enrichment, etc. So I'm assuming this is the context. Iran called yesterday to negotiate. Meeting with Iran is being set up. This is according to President Trump. That's big. If it were to happen, this is, it's almost as though we were living in a real-time video game. It's like non-stop. Arvind, any thoughts?
Well, I'm not sure what to make of it, because Iran has denied that it has tried to make peace. But maybe Iran is concerned that this whole protests, which have become very, very serious, they want to cover their flank on the taking the pressure off from the U.S. front. But I'm not sure everything that President Trump says is completely factual. So we'll wait and watch what happens there.
He's you're right. But you remember, Arvind and David, last year there was all this talk of taco and this thing. He's completely flipped that, right? I think he took it personally. He's basically doing everything he says he will do. Through and through, he's following through. David, your thoughts on the point that Arvind made earlier, which is that markets seem to be unbothered by everything which is happening. It's a highly news flow is also at an all-time high and very disruptive news flow, but markets have been unbothered so far. You think at some point this is going to take a bite out of the strength in markets? All of this.
I would maybe push back against what Arvind said. Are we whistling across the graveyard? Maybe a bit. Is the dollar likely to depreciate if this criminal probe goes through? Probably. Are U.S. assets going to look less attractive? Yes, probably. But in the near term, I think ultimately what matters is earnings. Are companies growing? And I think that that's going to continue to happen this year compared to last year. We have to think about in 2025, everyone worried so much about the tariffs, and it was supposed to be stagflationary, and they ended up not being so stagflationary. In fact, growth actually accelerated in the US better than expected. So ultimately, it's about fundamentals. And I think that fundamentals are going to improve, not only in the US, but in other parts of the world. But I think that emerging markets are looking more and more attractive relative to US assets for a variety of reasons, including this subpoena that was just given to the Fed.
All right. Hi, David, and hi, Arvind. Good morning. Nigel on this side. Well, David, let me take you a little bit forward on that point then, since you're saying that the emerging markets are looking attractive. FIs, they appear to be on a prolonged break from the Indian markets. Is this temporary reallocation driven by global yields, geopolitical issues as well? Or is there a deeper shift in perception towards India? What's your take?
Well, I think that India markets massively underperformed last year. I think up around 3% compared to EM, which was up around 30%. And I think that it's just, India used to be the darling of emerging markets. It was the only index, the Nifty was the only index that outperformed the S&P over the past, 10 years from 2010 to 2020. But I think over the past few years, there have been a lot of other rising stars that have been coming up. For example, the AI trade, China over the past couple of years, Taiwan, Korea, a lot of these competing EM narratives that India previously didn't have to compete with are now out there. So I think that ultimately coming into 2026 and the year ahead, I think investors are looking to allocate, and I think that they will start to allocate more so to India because it's underperformed, but also because Indian earnings estimates are finally starting to improve. GDP growth in India is starting to hit more normalized levels. So I think that the India's story is going to improve over this year, and it should drive foreign flows back to India.
And you believe India will outperform in 2026?
I think that EM will outperform largely due to China. China has the biggest weight and EM, but I think that India is starting from a much lower base in terms of outperformance. I think that India could be one of the best performers for EM this coming year.
That's nice to hear after last year's underperformance. Arvind, getting back to your earlier point that how market sanguineness towards everything that's happening is making you nervous. Markets are shrugging off everything and hitting record highs day after day, at least on Wall Street. How would you position your portfolio? If you are nervous, are you positioning for risk off? What is your expectation, say, for the next 3 to 6 months?
Well, I wouldn't go as far as 6 months, but for the next 2 to 3 months, we are quite overweight anything that is to do with precious metals. We are long other metals names because we think the dollar weakness is one of the risks, and today's action against the Fed highlights that risk. So again, in a broader market sense, we are overweight, of course, some of the beneficiaries from a power infrastructure standpoint on the AI trade. This on a global basis, and I agree with David that emerging markets are likely to benefit because the U.S. market, could see flows out if dollar weakness because of expectation that Fed policy is going to be much more dovish, then it makes non-dollar assets attractive. And I think the growth side of the story is looking attractive. And India, I think finally we're starting to see signs from a bottom-up standpoint, data like auto sales in December, electricity demand in December. There are other data points that we've been looking for signs that the domestic economy, and I think the GST moves and other things that the government is doing, are starting to show signs that 2026 could be a year where India stands not just on expectation that it should go up because everybody else is going up, but it should go up or it will go up because earnings are starting to reaccelerate. And I think that's going to be the key driver for India. But on a global basis, we're a little more bullish on India this year than we were last year.
What we're going to do is continue this conversation later on. Arvind and David, thank you very much, both of you, for joining us here on CNBC TV 18. And as I said, more later. We'll take